is a brand new month. It is a brand new day. Welcome, my name is Montivino Valentine. I am the co-founder of the Pride FX movement. Now, if you have not subscribed, please do subscribe, hit the like button as well as the notification bell so that you can receive future videos we do have on this channel. Okay, so we're going to dive straight into today's video. Today's video is about FX G.O.A.T 2.0 market structure course. Okay, and so in this course they do take you through a 3-month practicing, and then you can go live. Okay, so what I want to say is that people have been asking what happened to the 30-day challenge. And so in the 30-day challenge, I have watched previous videos on our YouTube channel, and I was just thinking about more improvements. How can I improve the experience for users? And so how I came about was to design a website. So every single course that we do take you through will become a boot camp so that you can learn information much more easier. And so if you do have a detailed PDF to explain everything to you, it will be much more easier for you. So this is our website. It's called pride-fx.com. I've also put the name of it in this video so that you can just put it into your web browser and you can go and look at the content. So for now, we only have FX G.O.A.T 2.0 part 1. This is only part 1 of the strategy. There is a lot of other parts that will follow from Monday so that you can actually enjoy. So let me just take you through a small tour about this website, and so that you can have the best experience with it. So first of all, if you want to go to the home page, it is linked into our Pride FX icon over here. So once you click onto it, you can see there's a little bit of animation over there. So from yellow it will turn to black, and you can click on that and it will take you directly to the home page. The home page is just much more easier for you to go around. And so you have our slogan over there, which is Lead with Pride. We also do have an about page. Now, many of you, your experience will be different if you are using a tablet, if you are using your desktop, or if you are using your cell phone. So for a cell phone, you're going to have a menu bar that will show up. So for desktop users, this is what it would look like. Okay, and so if you go to our about page, it will explain to you in detail what is Pride FX about, and so you can look at that. If you want to send me a contact, this is the best way actually to get a hold of me, is to actually just put your name, your email address, and also if you are saying thank you to Pride FX, or if you want to have if you have questions to ask, you can just put it down in the message so that at least I know what are we going to talk about. Make sure also to put a lot of information in there so that I know exactly what to speak about. So here we have the privacy policy, and it's always a nice thing to know about the privacy policy. Number one is that if you do join, or if you are on this website, is that your information is not actually being watched by anybody, or that there is an algorithm to pick up on what you do or what you search. So the privacy policy is just to make sure that you and myself are protected. I want you to know at least what you are protected about. So you can go through this, you can read what it says, and so you can see here it says do not sell my personal information. So that's one of the key important parts about a website, is always to have that. And then children's information, if your children are actually forex traders, it's just to protect them as well once they do get onto this website. Now you can see that we also added the icon over there, and then here you can see it is pridefx.com, and so that's all the things that you'll know. Okay, and then here we have follow us. So for those who have asked me for my Instagram handle, for Telegram handle, or for the YouTube channel, all you have to do is click on them and it will take you directly to the Instagram page. It will take you back. If you click on the Telegram, it will take you to the Telegram page, and as well as YouTube. So it will take you directly to our homepage here, so that you can see what content we do have. Okay, there's over 52 videos that you can watch, and so you can actually do that. if you are interested in that. So at our homepage is where every single information will be there. Okay, for those who are struggling actually to grasp information or wants to read about the information, you can just come over to our webpage, pride.fx.com, and once you're over here, just click on the first blog. The first blog is about FX G.O.A.T 2.0. And so if you really want to know more about what we are speaking about today, or if you just want to read more information and gather more information, this is the best place to go. As a beginner, as an intermediate, or as an experienced trader, you can come over here and just read what is going on. So today we are doing part 1, and it is support and resistance. In this article, we do actually explain to you what are we looking for in the first part of the FX G.O.A.T strategy. Okay, so what we're going to do today is just ranging markets. So I'm only going to read this to you so that you know what we are doing. If you want to actually go and continue reading, just go on the website, read about it, but don't leave as yet, because we need to still go over the information about what today's lesson is about, and I can also show you how to look for these ranging markets. Okay, so this condition needs you to understand a ranging market. A ranging market is also known as a consolidation period, where the market is moving from one point to the other. There is no trend, which means an uptrend or a downtrend. The market makers have no motive of moving down or up, but just staying in this accumulation phase. Okay, and so this is what a ranging market looks like. A market will move in a zigzag pattern. Okay, so you can go and look for how to get those sell trades or how to get those buy trades. This article actually explains all that to you. Okay, so I'm not going to be much more focused on this. You can go and read it. It's for your benefit to know what's going on, and also what you will see in part 2. So you can see the next part of this will be breakout at support and resistance. So the next part is to explain to you how to get that breakouts, how to look for if the market is still in a range, or how to notice that the market is about to break out of that range. Okay, so a very nice article to read about if you are starting out with price action, or if you are still struggling with price action. Just go and read this, and then tomorrow, Monday's episode will be more about the breakouts. The following episode will be about trends, how to enter trends, how to exit trends, and so forth. So this article will tell you how to exit out of a range, how to enter into a range, and so forth. So make sure you go and read this article. Okay, so let's get back to today's video, and today we are speaking about part 1, which is FX G.O.A.T 2.0. And so today all we're going to talk about is the ranging markets. Now, as the definition said, is that this is just a consolidation phase or accumulation phase, where big traders and small traders are basically not pumping up lot sizes and not moving the market as drastically as we would like the markets to move. Okay, so the first thing is that we need to first find reversals, and the first reversal I can see over here is this reversal over there, right? So all you're going to do is basically plot it in, right? Once you have plotted it in, you need to see what history says about this reversal. Is it a good resistance area, or is it just another reversal area where price is just fooling around? Now, if we go over here, we can see that the history shows that this area was once a very respected area, an area where price continued to reverse or continue to find support at this area. Okay, so just to give you an example, over here we had a big run, a rally of a run in 1, 2, 3, 4, 5, 6 hours, and then price broke down back there, and we can see that price went back into a accumulation phase. Okay, you can see there is a range over there, but I don't want to speak about that range. There is a range over there. And then here we can see when price broke over, it came back to retest, and then there was a buy and the market was in this range. You can see we could have had multiple profits over there before price broke back into the second range that we had previously. Okay, so we can clarify, or we can say that this is actually a respected area. And you can see over there, when price tried to break through, the market brought it back down to that zone, and then two candles had to confirm the breakout. So it shows you that there is a lot of respect at this area. Now when you go up over there, you can see that there is another range. So there is a new phase of a range, and then price broke out. Okay, so just to show you that range quickly, this is what the range would look like. So from there you would have taken your buy, exit over there. There you could have taken your sell, price went back over there, and you can see that price came to touch. So always keep your emotions intact when you are trading. Okay, so I'm removing that, and I'm going to remove that as we are looking at a brand new range, and here is our range, right? And so the second place we can see price reversed there was over here, right? And so once price reversed over there, all we have to do is the same thing. Let's go and see what history says about it. We can see there, and there price respected that range, right? So very important to always look at what has happened in the past. So now what we're going to do now is actually look. So here we had a sell, and there we had a buy, and then over there we had a sell, and then price broke through there. So whenever price breaks through, okay, just make sure that you're updating your trend, okay, or your range. So your range would end over there. We can see that price 1 2 3 4 touches to that side. So that would confirm that this is a brand new place that the market would play around. Okay, always make sure that you're updating it. Do you delete the old one? No, we're still going to use that for entries, right? Don't remove anything. Okay, leave it as you have analyzed. Okay, so the first analysis we did was on our support area, right? And then we did one on our resistance area. So we know that between this place and this place, price was supposed to play in that range, and then price made a new low low. Okay, and then we can see price went back where? To our resistance area, right? And then from that resistance area, price went back to our first support area. And what happened at that support area? Price broke out. Okay, so before we continue, we need to do justice to it. So over here we have this range, right? So we're just going to draw it in as far as possible, and make sure that you're also getting those wicks in. So these wicks also tells us where would price actually be, okay, or where should you place your stop loss. And so before I continue with that, I need to delete this one, or just move it down. So don't focus on that one for now, right? So here we have our support area. So where do we enter in a buy place, right? And to enter into a buy place, we can see that price actually went down to that area and then rejected back above the support area. Okay, so for me, that's a confirmation that price might move to that area. It always tells you that price might move to that area, right? And so when we look over here, we had a buy over there and then a sell back to the zone. So once the market enters your zone, you can start placing entries, right? And where would your stop loss be in that area? It would be just below, right? We are not focusing on what's going on over there. We're explaining this. So let me rather do this. Okay, so here we can see that price is over there, and then price went for a buy, right? And then where did it reverse? At the same place we plotted our resistance. So what do we need to do there? We need to add a order block or a resistance block, right? So I'm going to enter that block in just so that I know where to put my stop loss, right? Your stop loss, whenever you do enter in these zones, would be just above just above where the tail was, right? And we can see that that tail extends above. So what I need to do is just delete this because you're going to get confused. So let me just delete this quickly. Okay, so what I said was that when price gets over there, we can see exactly where to place our stop loss, right? And your stop loss can be just above. Now, how do I take justice in doing that, right? Is that if my entry is in the zone, I can actually put a higher lot size. That's how I work with support and resistance. So now I know that if price actually breaks out and it's going to go and touch, I know for a fact that it might be $20. Now, if I didn't know where my support or my resistance block is and I went up there, this would have blown my account with a big lot size. So now that I know where my resistance is and where price actually went to go and resist, I can actually put higher lot sizes. Okay, so there you can see there, you could have taken that sell, and then like I said, price broke out over there, right? And so now what we need to do is just remove the stop loss and actually just move this back to where we were, and that's over there, right? And so like I said to you, update so that next time when price does get to a new area, you at least have your sell entries or your buy entries. Okay, so now we have updated that there is a new support area, and like I said to you, the second support area would act as our entry area, right? Our second entry area. And so what we can do here is just highlight the zone. Why are we highlighting it? Because we want to know where to place our stop loss. So the lowest rejection was actually at that candlestick over there. I'll show you exactly now. Okay, so our lowest rejection candle is this one over here. So the reason why I've entered that is because it might be a possibility that price could come back down there, right? So where would your stop loss be? Your stop loss would be just below that zone, so that at least you know what is going on. Okay, and in here we can see that we could have taken that buy entry, we could have moved up, and there is our exit, right? So now for this stop loss, I'm just going to move it to the new high that the market has set in this area. So this is our new high. I don't know if you can see that new high, right? That's a new high. And how we know that is a rejection zone. If we're looking back at the past, we can see that the market actually did reject over there. There's a rejection, there's a rejection, there's a rejection, and that one also there. So it's a confirmation of the rejection. So what you can do actually is just highlight it as well, just like that. Okay, we will use it in the future. Always remember that everything you do, don't erase your analysis. You're going to use it again in this market. It's just a pattern that needs to play out all the time. Okay, and so here we have our sell entries in this range, and so you can see that from that point we just need our stop loss. Where would our stop loss be? It would have been just above that zone. Okay, so if you are someone that wants risk management and you want to have a better entry, and as well as much more, you have that risk factor involved, then you could have put your stop loss much higher if your lot size is smaller. Now for me, if I wanted to enter, I normally enter with big lots, so I would have had to enter my stop loss just above my resistance area. Okay, so here we had our first sell entry, and like I said to you, when it gets to your second resistance area, you are allowed to take more entries, right? And so you can see that that is your sell. Now you have two exit points at this point. You could have exit over here, or you could have exit at that area, depending on you. Now that's another one, and then here we have a buy entry, and we can see we could have taken another buy, and here we have two exits. Okay, at the first resistance area or at the second resistance area, depending on you. And now take note from this point that price reversed over there. So what is that? That is a new update to our range, right? So you're just going to add that into the range, and what you can do is just bring your order block or your resistance block, and you can just add that in. Now the highest candle over there is this one over here and this one over here. So where would our stop loss be? Just above that zone, right? So always keep updating so that you know what is going on in the markets. If you only updated 2 or 3 support areas, you're not going to know what is going on. Make sure that you are keeping track of what is happening in the market, right? And so here we can see we had our sell. You had 2 exits again. The first exit is always the perfect exit. Just remember that. The first exit is always the most important exit. Here we have a sell to which? To there, right? So you could have closed that trade over there. And then over there, you could have closed the trade over there. And now you have 3 exits, right? So the first exit is always the better exit. Always remember that. So here you could have exit here, here, or there. Now remember, the market never went there. So that's why I'm saying to you, the first exit is always the better option to take. And then here we had a sell over there. We had a sell over there. So you could have decided which one do you want to take. So if you decided to take this one as well as that one, you could have had 2 entries, and you can see that the market went to your first exit zone. So you could have exit over there and take a new buy entry and exit at the first exit. Always take your exits at the first exit. Here you had another sell opportunity, and you can see when it gets to your first exit, it actually went to your second one. You could have decided when to exit. Okay, and then from here, a buy entry, your first exit and your second exit. Okay, now that's not always going to be the market. This is DE30. You can decide on the range. Now remember that there was a low over there, right? There was a low over there. So we can see that price broke through both our support areas, actually all 3 of our support areas, and went to this new low, right? And so from this new low, we could have had this zone drawn in, and then price went up. Okay, but that's for the next video. This video is actually just about this range that we were speaking about. So what the range I'm speaking about is this range from this point until this point. Okay, because that's the range that we were working in. Now breakouts will be in tomorrow's video. So that's the range that I'm speaking about. So you can see from there how much money you could have made between those ranges. Now if you do spot a breakout, it is for tomorrow's video. I will explain to you what happens over there. Now just to show you an example, past history came into play here, and you can see when price got to that zone, if you are advanced, you could have taken that buy entry, and you can see where you would have exited, which was our final exit in that range. You could have even had multiple entries. Here's our first entry, second support entry, and then you had 3 entries into the market. Okay, so that's the first example of the range, right? So we're going to go into our second one, which is Nasdaq, that most of you like. And here we have a very big range. Okay, so over here we have our first reversal. Always remember to look for those first reversals. Okay, and then what you can do is plot them in. How do you know a reversal has happened? Price was rallying upwards. So if you look at this, there is a rally towards the upside, right? Let me just check. Okay, so I made mine yellow, and you can see that price was rallying to the upside, right? And so in this uptrend, what happened? Price reversed over there and made a brand new low. Remember, this was your higher lows, higher low, higher low, and then price came over here and created a new low, the lowest low, right? So what you need to do is look for the next reversal, and our next reversal is actually going to act as our support, right? So let me just delete this, and so this would be our new low, right? So just enter it in like that. And so obviously this information would not be there if you're looking at a live chart. I'm just making an example out of ranging markets. So let's check back what happened actually at that point. Okay, so here we have a far back place to go. So obviously over here we cannot see that, but it's fine because we know what we are looking at. So here we have a range, right? And so what you need to do, first of all, we need to find where can we apply our stop losses when the market has created a brand new high or a brand new low in this range, right? So our stop loss is over here, right? That was our candlestick. Our highest candlestick at that time was that over there. So let me just change this. So our brand new candlestick is this one over here, right? And then we had our entry over there for a buy, and we would have taken a sell over there. And so obviously, like I said to you, make sure that your stop loss is maybe there so that you have that breathing room, okay? And then we have a new high. If you look closely, there is a new high. So all we're going to do is, because it's so close, you can actually just, you don't have to put a new line, because it's just going to make your chart look very unprofessional, and also it's going to make it look very confusing, right? And so here we have our new high, and so our stop loss would be above that point, just like that, right? And so if price ever decided to break through, then obviously it hits our stop loss and so forth. So here we have the market reversing there, and we can see there is a new buy opportunity. In this buy opportunity, you went back there, you could have entered, stop loss is still above, and you can see that when price came back down, over here is a new low. So all you need to do is update it. It's very important. Always update your chart. And so here you had that, and you can see that price went up. So you had that buy, and then there was a sell opportunity. Now this low that we have here showed that price actually went below that point, and so you would have been correct in holding to the first exit or to the second exit, right? And so now you can see that from this point onwards, you could have taken a buy trade, right? And so we have this low here as well. So let's just add that low. And so we're just going to highlight that low so that if ever price gets there, we know exactly what to do. Okay. So now that we have that in, we can take that buy trade. You can see from the resistance, our first exit is always the best exit. So you could have left the market over there. Now we have a brand new high. That's a brand new high. So all you're going to do is add that in like that. And then we can see price was playing along this high. Okay. So if you had an entry over there, the market didn't give you the pips that you wanted, because remember your first exit wasn't taken out, right? And then the market continued playing in the zone, went back to that zone. So whenever this happens, enter more trades, okay? And then because why I'm saying enter more trades is because the market never went to your exit as yet, okay? And then so from there we can see price went there, you had a buy opportunity over there, the market went to your first exit. So you take your profit, you take your sell trade, and then market gets here. So the market gets here, you take your buy entry and give it some room for stop loss, and then you went up, never touched your exit as yet. Price came back down even lower than your first entry, right? And when this happens, just enter, because remember you have 3 possibilities of the market going lower, right? So here you can see that the market went to this spot, and then from the spot it went up, right? Never touched your exit point as yet, but if you look closely, maybe it did, right? So let me just show you what I mean. So if you look closely, the market went there, right? There's your exit, right? Why is it your exit? Because the candlestick told us that that is your exit, right? And so there you could have exit, you could have went down there, new entry. Now this is what I wanted to speak about. The market never touched your exit point, right? You have 3 options over here that the market might go to your lowest point, right? So you could have entered a buy there and a buy over here, right? So your stop loss would have been, if the market decided to go up over there, right, like that, then your stop loss would have been there, right? Now when the market came back down, you could have updated your stop loss, move it below this point, and have 2 buy entries. And if the market decided to go lower than that point, you could have entered there and then put your stop loss over here. Now that's a strategy that I use in market ranges, so that if I am wrong over here and the market goes lower and I'm wrong over there and the market goes there, that's definitely a confirmation that the market will shoot up there, right? So that's how you determine in a range when to enter and when to exit. Okay, so over here we had an entry over there, we had an entry over there, and then the market went to our first exit point. If you wanted to hold longer, you could have hold for that exit. Okay, here's a new range, but like I said, this is a breakout obviously, and the market plays in that zone for some time, and there is new places that the market could have been more, you could have had more entries, right? But that will be explained in tomorrow's video, on Monday's video. And so the last one is USDCAD currency pairs. A lot of you trade currency pairs. It's totally different to CFDs. You don't have that new updates on support and resistance ranges. Okay, so over here I wanted to speak about this range over here. There is a few other ranges there, there's a range over there, but this one was the key one that shows you a perfect range. Okay, so the first thing is the market rallied. What do we need to see? When is that new high going to occur? And the new high occurs over there, right? But the reversal for this started over here, right? So that's the reversal that we are looking for. Then the second one is, where did the market reverse to go back down to that support area? And so that would have been over here, right? That's the information we would have had before continuing looking for those entries over there, right? And so here we have that. And so what we need to do is put more flesh on our skeleton. And so that's all we're going to do. Going to put a support area and we're going to put a resistance area, just like that. So that is what we would have had. That would have been our highest point. So from there, all we have to do is look for the sell. There the market went there, then the market came back down here. So now remember, we wouldn't have had our first entry over there. Our first entry would have actually been over here. And why I say so is because we wouldn't have known that the market is going to reverse there, and we were looking for that second reversal so that we know when to take out trades, right? So that's our first entry over there. And our second entry would have been this one that came to the zone over there, right? And then price, what did price do? Price went there and then went back up over there, right? Now, like I said to you, if the market is so close to each other, you don't need to plot a new line, right? Because there, our stop loss might have been just above that zone, right? So obviously, all you need to do is just draw in this block to give more information of what has happened, unless there was a big a brand new low, a new low, like a low that, or very big high, right? And so we don't need to have two lines over there. That line, even these lines, you can delete them once you have found that support and resistance zones. Okay, so you could have just had your block, your order block, right? Or your support and resistance. So it would have looked something like this. Okay, this is just for neatness. If you like neatness, this is how your chart would look. Okay, and so like I said, your first entry would have been there. We can see that the market came back there and went higher than that one before. So what we had to do was update that into our system, right? And so this would have been your second entry for this sell. Remember that the market never went to your exit area as yet. So you could have entered over there and you could have entered over there. Now you have two entries into the market. So the next thing is just to update your stop loss, or you could have left it where you have left it, right? And then the market moves down there. It went back into our zone if you wanted to add that in, you could have. Why? Because the market never actually went to your exit. So now you have 1, 2, 3 entries because the market never went to the support area. Okay. And so what you can do from there is exit over there. And what do? You take your buy entry over there, right? And then over here, we had our exit there. Remember, when the market just enters your zone, make sure to take those exits. Here you had a sell, another sell, right? 2 sells because the market left that zone and came back to that zone. So whenever it does that, enter more. Why? Because the market has not went to your exit. Okay. And then when does it go to your exit? Over here. And then the market breaks out. So breakouts will be in Monday's video. Don't forget to go and read about ranging markets on the Pride FX or pride_.com website, so that you know exactly what are you getting yourself into. And also make sure that you have subscribed, have hit the like button, as well as the notification bell, so that you can receive future videos on this channel. On the website, make sure that if you want more content on this, leave your email in the newsletter, so that when we do have new content, which will be on Monday, you are updated that there is new content, and we will also release it on Telegram. Make sure also to share it with your friends. We do have a Telegram link. We have Instagram, Facebook, WhatsApp. So if you'd like to share this content with someone, please do so that they can also have the experience that you have. That's it from me, Montivino Valentine from Pride FX.